Chris, with the run-up in AI stocks and some of those valuations getting so high, the market looks a little expensive, or at least that's what the public is saying.
Yep.
What say you?
Yeah, so this is from our friends at Fundstrat. Six items have happened in the last 5 years. COVID shutdown, supply chain issues. Inflation is so funny. Eggs. I mean, inflation, eggs. As a result, Jay Powell looks unhappy and raises rates a lot. Then you have tariff, global disruption. And then, of course, the Iran conflict, which, on its face, normally would have caused like some major issues.
Yeah, right.
Anyway, so you had 6 quote unquote black swans. I don't know if all those rise to the level of black swans, but on an equal weight basis, that is each company representing 1/500th of the S&P 500, PEs in that time period, price to earnings multiples, actually dropped.
Wow. Okay.
So the average company in the S&P 500, you can't necessarily argue is more expensive.
Right.
On an equal weight basis, doesn't look more expensive. On a market cap weighted basis, looks about 1 to 1.5 times more expensive. So like 21 times earnings. I think the peak back in 22, late 21, early 22 was like 23 times earnings. So, definitely not cheap on a market cap weighted basis, but equal weight more so. I thought this was interesting. This is from our friends at DataTrek. If you look at the rest of the world, the MSCI All Country World ex-US Equity Index, ultimately a 2-year trailing return. Yeah, it looks a little bit more expensive for the rest of the world than maybe quote unquote average since 2010. But some of that's due to the run up just year to date. Now, if you look at them on a multiple basis, this is not a multiple basis. The rest of the world still doesn't look expensive on a multiple basis.
Right.
Plus, if you've got a falling dollar, which we've had year to date, certainly that ought to
tends to buoy international stocks.
Yeah, it does. Now, if you look at the NASDAQ, and this is a market cap weighted chart, if you look at the NASDAQ on a 2-year trailing number since 2010, it does not look expensive. The standard line is the average, and then one standard deviation above. So we're kind of closer to the average than we are one standard deviation above. 2 standard deviations would be like, hey, this is expensive.
Right.
It's not. Companies that are doing a tremendous amount of research and development in artificial intelligence are in the NASDAQ. They're in the S&P too, but I mean, they're in the NASDAQ.
Right.
Right?
Yeah. Bigger weightings there.
By and large, doesn't look that bad.
Yep.